San Francisco Bay Area home buyers, are you curious to know what your options are for down payment assistance programs? Well, you're in luck. This is what we're covering on today's episode, so stay right there. Welcome back. My name is Dale Corpus. I'm a Tri-Valley realtor in the East Bay of the San Francisco Bay Area, and I post videos every Friday about all things real estate. So today's episode is going to be a little bit different than my previous episodes, as it's more like a podcast interview style where I have a loan officer guest talking about the different types of down payment assistance programs that are available to you right now here in the San Francisco Bay Area. They work throughout California as well. And some programs may require you to be first-time home buyers. Some may not. And you just might be surprised on just how little down payment you need to get into a home right now. Right now, with the market shift, it's been one of the best opportunities for folks using down payment assistance programs to get into the market because there's less buyer competition and sellers are aware of this and they're more amenable to working with folks with the lesser down payments. Whereas prior in the last 3 years, it's been really hard for folks using down payment assistance programs to be able to compete with folks doing conventional financing, typically with 20% down or more. So if you're in the market and you're considering using a down payment assistance program, right now is one of the best times to be watching this video because you may be finding yourself getting a contract sooner than you might think. Anyway, my guest today on the show is Diana Legaspi from Guild Mortgage. I've had the pleasure of working with her personally over the last 2 years, so let's just jump right into this. Diana,
Awesome.
welcome.
Thanks for having me, Dale.
Yeah, you're welcome. How are you? Really fast?
I'm great. I'm super excited. So let's do this and let's get as much information we can out there to allow buyers to get into the market.
Okay, so I'm just curious. People think you need 20% down. Sometimes people think you need 10% down. Just how little down can somebody get into a property over in the Bay Area?
Well, just to give you an example, last month we actually closed a transaction for a client who was told by other lenders he didn't qualify and he wasn't going to be able to buy a home.
Okay.
Fast forward a few weeks, we met. A week later, we're in contract. They were able to buy their first home with about $3,500 out of pocket, literally out of pocket. And they still can't believe it. They actually are still texting me.
Okay.
Wondering, oh my gosh, how did we do this? Because they had some credit challenges, but we overcame those, and now they're homeowners.
Okay, that's interesting. Did they use a combination of down payment assistance programs and maybe some credits from the seller, or can you just give a little bit of a breakdown of how because that's a real scenario? And
it is.
Yeah.
Yes, it is a real scenario. Yeah. So basically we ended up running credit and just, to be open, they had a bankruptcy. Yeah. So we ended up using CalHAFA, which is a form of down payment assistance. And we combined that with 2 other programs. And in addition to that, we were able to get a $5,000 seller credit.
Okay.
So with everything combined, it was about, we had set a goal of less than 4,000 and we came a little bit under. So it was $3,500 out of pocket. Okay.
So a couple things I'm hearing out of this. It's like the word credit challenge just jumps out at me. So it's like, for those that are listening, you don't necessarily need to have perfect credit to work with down payment assistance programs. I mean, just Diana, a question I have for you is just how low can somebody have on a credit score to be able to even work with the down payment assistance program?
So typically the minimum score is 640. Okay. But if you're a little bit below that, we can analyze the credit. Okay. There's always room for improvement. And the thing about credit is that until we discuss the actual credit and we know what we're working with, most of the time we don't know what to fix. So what I always tell clients is there's always a solution, but you have to want it as bad as I want it for you. Okay. So these clients, for example, they listened. They had to pay off 2 little credit cards. And we were able to bump their score just enough to get them to qualify for the program, which is what allowed them to move forward with the buying of the property.
Okay. In terms of max price points, working with down payment assistance programs, the next question that just jumps out at me is because down payment assistance program are connected to, certain, conventional loan sizes and whatnot. Is there a certain maximum price point that people could get into, or like how does that all balance out with, using down payment assistance programs and max price points?
Yeah, I mean, there's definitely limits. It's definitely max. So it's not something that you could do jumbo financing with just yet, right? But what we do know is that the loan limits are changing. The high balance loan limits are changing. So the conforming limits just changed, right? So they're at roughly 715 now, but then the high balance loan limits are about to change to a little bit over $1 million, right? So that will happen in the next couple of weeks. With that said, the programs will be adjusted accordingly. So really, as of right now, I would say, 750-ish. And then we can go a little bit higher because right now we can go to 970. But basically with down payment assistance, what we want to be mindful of is that each program has a little box, right, of qualification. So my job as a lender is to understand what your needs are, understand your credit and your finances. And then from there, I go to each program and figure out which program fits best for you.
Okay. Speaking of the different types of programs out there, I know that, you're the guru as it comes to this stuff. I know that you shared with me, like, you have a kind of like a graphic and whatnot that talks about the different programs. Do you mind sharing with that? Because I think a visual would be very helpful.
Yeah, absolutely.
Like, let's even talk about CalHAPA. I mean, that's an acronym that you use. And what is CalHAPA? What does that stand for?
So the cool thing about CalHAPA is that this year, actually, they've expanded the program even more. So basically, CalHAPA can be combined with different layers. So you could do a first mortgage CalHAPA loan and really not use any kind of assistance. But then you have CalHAPA, which is the key program, and you can add a ZIP, which is another form of down payment assistance. And you can add My Home, which is another form of payment assistance. So basically, you're just layering everything to maximize what you're getting. Now, one thing that's important for me to know is that if you're like a first responder, or you're an administrator, or you work for like a school district, a CalHAPA actually gives you a little bit more as a thank you for your service.
Okay.
So that's also good to know, because I know that there are many first responders out there that are also always asking. But basically, we can combine any of these together. And the newest thing that just came out is that CalHAPA Forgivable Equity Builder. So they give you up to 10% of the sales price. So basically, deferred payments. And then if you stay in the home for 5 years, they forgive it.
Okay, got it. Meaning if you stay in the home for 5 years, you don't need to pay that loan back.
Correct.
Ever, right? Is that correct?
That is correct.
Like I noticed on the top left, the Cal Plus with Zip, that doesn't, it looks like it's a 0 interest junior loan. So that's 0% interest. How about this CalHAPA My Home Assistance and the CalHAPA Forgivable Equity Builder loans? Do those have interest rates by chance?
Yeah, so all of these programs are going to be deferred. So there will not be anything up front. So you're going to pay your first mortgage, but you won't be making payments on any other mortgage. And basically how it works is, as we know, nothing's free, right? So what do we have to pay back? So basically, if we did a traditional CalHAPA transaction, and let's say we used My Home and Zip, if you were to sell the home or you were to refinance, you would have to pay off that second and third lien. Okay. And that's typically because you have to pay it back. Now, one of them is deferred and it's 0 interest. The other program is simple interest. So you do have to pay it back with a little bit of interest. But I will say, based on my experience, a lot of clients that have used CalHAPA, we've been able to refinance, I would say, in maybe 2 or 3 years. And not only have we been able to pay off that second and third lien, but we've been able to not only pay them off, but we've been able to also lower the rate to reduce the payment. So it's a win-win. Okay,
no, that sounds great. And the next question that I have is, knowing that these programs, they're sponsored by, government agency and whatnot, typical closings is about 30 days in general. When I work with my clients, do these require longer closing periods, or can they even be closed within 30 days? Because I don't even know the answer.
They really don't, honestly. At least for me as a lender, I do my homework up front. So before I issue a pre-approval to a realtor or a client, I will be very I would have done everything already. So my goal is always that by the time we're in contract and we say we're going to close in 30 days, we close in 30 days. Now, CalHFA will typically follow our underwriting.
Okay.
And of course, if they question something or they don't agree on something, they will let us know. But I would say we've been very successful in being able to close in 30 days.
Got it. Is CalHFA only available to first-time home buyers, or?
It is.
Okay.
It is. CalHFA is only available to first-time home buyers. But I do want to note something that's very important that often gets missed. You're considered a first-time home buyer if you haven't owned a home for the past 3 years. So if you owned a home 10 years ago, but you don't own a home now, guess what? You're a first-time home buyer again.
Okay, got it.
So you can take advantage of the program.
And is CalHFA connected to any sort of median income restrictions or anything like that to qualify for using these programs?
There's definitely there's income restrictions, and of course they go up every year, so they're pretty high. And like there's Alameda County, Santa Clara County. The income limits have gone up quite a bit. If we're going to like let's say Merced County, the limits are a little bit less. But really one of the first things we go to are the income limits when we're talking to a client, just to ensure we're within the limits.
Okay, then that makes sense as well. I mean, are you noticing, with the shifting market, are you noticing people, working more with down payment assistance programs, or the borrowers you're working with? I'm just kind of curious how often you see people working with down payment assistance programs.
Honestly, it kind of just depends. I would say 1 out of 3 clients that I work with use down payment assistance. Maybe they're short a little bit of funds. Maybe they just need the extra help to bring the payment down. So really, honestly, it really just depends. But for me, when I'm talking with clients, specifically first-time home buyers, even if they have the 3% down, the 5% down, or the 10% down, I will always show a down payment assistance option because I want them to know that they've explored all avenues.
Okay, that makes sense. Now, when somebody wants to do a refinance with even any of these programs that are listed on the sheet out of here, can they still keep those programs in place on the home while they're doing the refinance, or do they need to be paid off during the refinance? How does that work?
So the goal is to pay off CalHFA and to refinance into traditional financing, which would be a traditional, conventional, or FHA loan, right? So either one, the goal is always, conventional if we can, but if there are credit challenges, there's still an option to go FHA. Okay,
all right, that makes sense. Is there a requirement that CalHFA even has for a borrower to keep their loan for a certain period of time, out of curiosity?
Honestly, not really. The only one that has the restriction right now is the forgivable equity builder loan, just because they want you to keep it for 5 years in order for them to basically forgive the up to 10% you're going to borrow. But besides that, honestly, it's our job as lenders to watch the market, right? And if rates decrease enough and it makes sense for a client to refinance, we'll definitely bring it up. But if it doesn't make sense, then we'll wait until the time comes.
Are mortgage rates more expensive? Are they the same if a borrower chooses to use a down payment assistance program?
So basically, the more you borrow, the higher the rate is. So we really don't have much control over these CalHFA or down payment assistance rates because it's government driven. They decide what the interest rates are going to be. Now, I know there's been a lot of talk about buying down the rate. CalHFA is allowing that now, which before they didn't. So with the shifting market, we do have a little bit of that flexibility. But again, rates for CalHFA, CalHFA says this is what today's rates are. If you're in contract, this is what you're going to lock in at, depending on how much you borrow. The more you borrow, typically the higher the interest rate is going to be.
Okay, that does make sense. On the right side, in the right column, it looks like you have 2 separate programs. What does GSFA stand for?
You caught me off guard on that one.
Yeah. It's something we could Google later on. But like, are these
Yeah.
programs, like, let me ask, like, regarding that, that doesn't matter. We could Google that later. But what are these programs? Are these separate? Are these programs that can be, can these be combined together?
Typically they can. I mean, they're pretty similar. So again, our job as lenders is to basically look at your criteria or the client's criteria. And then from there, we kind of look at which program is going to be best for them. But just like how HAFA, GSFA, and GSFA Platinum also have interest rates that we have to follow. So we really don't get current market rates. We get whatever the rates are out depending on how much we use. And the more we use, the more expensive they are. And we have used GSFA before. The Platinum program is more for, again, first responders and just trying to give back. So you do get a little bit more. That Open Doors program is more for just generic. But if you notice the GSFA and the GSFA Platinum, the key thing you want to focus on is no first-time home buyer requirement, right? You see that. And the GSFA Platinum program is forgiven after 3 years.
Okay, I do see that. So I do see that. So are these programs only for purchase money types of loans, or can they be even used on a refinance?
They can even be used as a refinance. Most often, though, they're used for purchase transactions because typically that's where most of the funds are needed, right? For a client, the goal for these programs is to be able to provide closing costs and to be able to provide the down payment assistance to allow the client, let's say, Diana, I'm sorry, I only have $10,000. I don't know what I'm going to do. And then we'll go back and say, okay, which program is going to give us the most amount of money to stay within that $10,000 budget that you have? Because remember, even if you're paying $3,500 or $5,000 to close a transaction, when you're buying a home, you're still required to put that earnest money deposit into escrow, right?
Right.
So the question is, where would that come from? So that's another part of using these programs that's important for us to note, because, you know, not all sellers agree to, okay, I'll put 1% in escrow, or I'll put a 0.5% in escrow. So we have to figure out where the money would come from for the earnest money deposit part.
Okay. So if I'm hearing you correctly, you could be putting as little as 0% down. And on top of that, with some of these programs, you could be getting also some help for closing costs on top of that. Is that correct?
That's correct.
Okay, that is really, that is very, very interesting. For the GSFA, Open Doors and the Platinum program, I take it, is that also a government run thing, or is that?
Yes, they're both, all of these programs are government programs.
All right, got it. And so the individual banks do not set the rates, or individual lenders do not set the rates for any of these programs. These are all set by,
the program itself.
All right. That's good to know. What other types of questions for folks that are using these types of programs are commonly asked? Is there anything that I'm missing? I'm just
normally I get asked, are there income limits? What is the credit score minimum? And some programs do have a minimum of how many people can live in the property.
Okay, that's interesting.
None of that applies with these programs, but this is just a few of the many programs that are out there. Being mindful that, like, for example, Santa Clara County has the Empower program, right? Yeah. So every county has different programs as well. And there has been some programs that are not government funded, that are privately funded. But most of the time, what happens is once money runs out, then we can't use it, right? So then we kind of go on pause for that. So the whole thing for us as lenders, or at least for me, is that there's always an opportunity for a customer. I don't ever want a client to feel like I only have $5,000, I'll never be able to buy a home, because that's not always the case, right? It's always a good idea to explore, make a plan, and it might work now, and it might work in 6 months, but at least you gave it the effort, and at least you're seeing that you have options.
Okay, yeah, that does make sense. And then same question about income limits for the GSFA. Does I want to just double check that does that also have income limitations similar to CalAlpha?
Yes, there's income limits for typically all government programs will have income limits.
Okay. Oh, it's interesting. And just side note, I know that I work with a ton of loan officers, and it's just I find it really interesting that not all loan officers have the same knowledge about down payment assistance programs, let alone are willing to even, work with the loan with down payment assistance programs, because it's more work, right? I mean, it almost seems, to my knowledge, it's like each one of these programs is almost like a separate loan, right?
Yeah.
In doing it, and it's just great that you have experience, and it sounds like you are able to have streamlined processes to get all these things done. On top of that, and still close in 30 days, right?
Yep, we do as much as we can up front. And you are absolutely right. Not everyone offers these programs. Is it hard? Yes. But if it's going to help out a family, why wouldn't you do it? And that's my mentality.
Yeah. Okay. So that makes sense. Well, I think, is there anything else that you wanted, to leave, these listeners and buyers that are, just searching for answers with? Anything else that you wanted to share?
I would just say, if you've been thinking about buying and you are maybe a little bit scared because maybe you think you have bad credit, or maybe you think you're not going to qualify, I feel like you should still talk to a lender, because you just never know. And all you're doing is exploring. There is no pressure to buy something tomorrow, but you're at least exploring to basically gain the knowledge and know your numbers. So then you are ready to buy in the future.
Well, on that point, though, it's like a lot of people get scared of getting the credit pulled when they're just trying to learn about programs. I mean, do you always pull credit when you talk to somebody, out of curiosity, Diana?
Not really.
Yeah.
Not really. I will pull credit if the client starts to tell me there are credit challenges, because then I dig deeper. I have a tool that I use that kind of allows me to kind of play with the full credit report. So then I'm able to say, if you do pay down this credit card from 5,000 to 2,000, and you remove this late, then we can bump your score 40 points. So I will only pull credit if we need to go deeper to ensure the qualification is there, especially when we're using down payment assistance, because they are particular about credit.
Okay, that's good to know. So you have certain systems that are able to, tell people what they need to do and to get their credit score up. But how long does that process take? Can that happen in a matter of a month or so? If somebody,
it depends on the client, and this is where I put it on the customer. Like, it could take 2 weeks, it could take 6 months, honestly. I had a client that came to me with absolutely no credit. They had no credit. They couldn't even buy anything because they had none. And it took 3 months, but they listened and they closed on their dream home.
Okay. Well, excellent. I thought this was very, very helpful.
Yeah, of course.
Appreciate all of your expertise and sharing your time and knowledge with everybody. So everybody, that's a wrap. If you found this video helpful, do me a favor and give it a thumbs up and subscribe to my channel. You may also want to check out my past video on the 9 biggest surprises when buying a house. And the link to that video is on the top corner of the screen. Again, I'm Dale Corpus from eXp Realty in San Ramon, California, and I help buyers and sellers throughout the Bay Area and Tri-Valley. And I'll see you in my next video. Thanks, Diana.
Thanks.